Okay, I think we are good now. Yes. Okay, so we're trying to look at on weekly time frame. See how last week ended. Um, good. So last week we had the week ended bullish still. The week ended bullish, but even if the week ended bullish, it ended as an inverted hammer candlestick. Um, and you know you look at corn, for example, on the higher time, you find out that actually corn has been on like on an uptrend. But on the weekly time frame here, you can see that whatever push corn has had to the upside over the course of a couple of weeks now, it's as a function of just retracement from the original bearish trend that we notice exist on the weekly time frame for corn. You understand? So there is a bearish trend that corn happens to be. You can see how from here corn has made lows, has made lower lows, has made lower lows, and most recently, corn actually came all the way to clear this last low here, and then do some form of retracement into this place here, which would also seem like another block or a fair value gap somewhere around here. Okay, now corn has done that, and the way the weekly candle close, you can see that rejection that we had on corn at the end of the week, right? So yes, that will mean that there's some level of bearish pressure in the market. You understand? There is some level of bearish pressure in the market. There's some level of bearish pressure in corn. Even if, yes, corn seems to be trading bullish, you will have some level of bearish pressure that's going on in the market. So what that means is that very soon is highly possible that we'll begin to see some push to the downside. So the best way to do this is look at it on 4 hours, guys. Just look at the behavior of corn on 4 hours. You notice how corn has been pushing upward, range a bit, push upward, right? It makes a range, it pushes upward, it makes a range, it pushes upward, makes a range, pushes upward, like that. But for some time now, we've seen how corn has been able to make lows, lower lows, at least two consecutive lower lows in this uptrend, and that's a testament to a possibility that there's possible further sell that we could actually have in the price of corn, right? So what does that mean for us? That is a trading opportunity, right? And like I said last week, I said it that I don't advise that if you're trading corn, you trade with pending orders. That I don't advise that. Generally, I don't even advise that you trade pending orders, or like that's your system of trading. Okay, because that does not constitute for consistent profit, right? It's consistent profit is easier to attain if you're trading technically. So what does that mean? It means that we only need to, if we're trading corn right now, you want to take advantage of trading corn, especially with the sell that we'll likely expect. All we need to do is just watch out for the most recent zone where price has been rejected, which is somewhere around here. This is the most recent zone where price has been rejected. You see that the last time price was here, price broke up. Last time price is here, price broke up. So if we're expecting that sell in corn, price should be able to break below this zone, right? So you can see how from the weekly time frame, I noticed that, oh, it's very possible that this sell that we're expecting, or there's very possible that this buy that's going on the market will not hold for too long, right? And what we're able to do is we're able to trace the behavior of the market back, follow it into smaller time frames. From weekly, we looked at it on daily. From daily, we looked at it on 4 hours. From 4 hours, we are now on 1 hour, and we can notice that, oh, if that sell is going to be possible, that sell is going to continue, then at least price should be able to break the last major zone that it was supported from. You understand? Here. The last major zone is supported from, or price breaks that particular zone, then we can expect a further sell. So the answer is not to place a pending order, to place a sell. So remember that corn is an instrument that is very volatile, and profit per pip or loss per pip is quite high. Okay, so you don't want to be playing with pending orders. What you want to do is for price to conveniently break below this zone. If price breaks below that zone, then you can take advantage of a sell in corn. You understand? Here, but from the performance of corn like this, it will not be out of place if corn is able to at least sell to this point here. Okay, so if corn can actually break that particular zone, break that zone on the 4 hours, then you can expect that corn is going to at least sell to that, to the other marked zone that we have here. You understand, right? So that's what we have. That's what we have for corn, right? That's what we have for corn. Now, in case price is not able to break that place, then the market will likely make another high, right? In case price is not able to break this zone here that we have, and for that zone, we are looking at around this 439, 437 zone. If price cannot break below that 439, 437 zone, okay, then it's very possible the next thing we need to watch out for is the top part here. If price can break the top part, then that means that that buy will likely continue. Okay, if price cannot break below that 437 zone and price instead goes into the upside and breaks the create a new high, price is likely going to continue that bullish run. So what will we see in the market? What we'll see is that most likely the market is going to do like this. If the market can break below this point like this, okay, what market will likely do is market will head back into this zone to retest, and that is where you can now take advantage of your sell and expect the market to fall into this downside. That's why I said it's not a matter, or it's not a function of pending orders. Okay, anything that can make price to break below this zone, we will expect the market to retest that zone, and that is where you now want to look out for entering your sell to the downside. The same thing will happen here. If somehow price breaks above this zone, whatever makes price to break above this zone, then we expect the market to retest, to come back into that zone to retest, and then from there, we expect the market to push up. So that means that this particular place here, this place at this point where the market is retesting, this place I've marked with white, this point where the market is retesting, these are places where we'll now be looking to enter our buy or our sell, depending on what direction the market goes. But personally, I feel like although we are in a season, we are in the dry season already, so it's normal that the market is making this bullish moves, right? It's normal the market is making this bullish move here. So if the market breaks above that zone, then yes, you can actually look out for a continued buy, right? You can look out for a continued buy. But I'm very much it's something to watch out for. You need to have your 437, 439 zone marked out. You also need to have your 449, 450 zone marked out and see what the market does. I will not advise you to go and start placing pending order, but wait for price to break above or below any of these zones. Then let the market retest it, and then you can take advantage of that move, right? So we talked about but let's also look at coffee. Let's look at coffee. At least even beyond um no, not cocoa, coffee. Coffee is also another very profitable instrument. I tell you, very profitable. And let's look at it on the weekly time frame. So the same, you see the way corn closed, and corn closed as an inverted hammer on the weekly time frame. Coffee itself closed as even a bearish inverted hammer. Coffee closed as a bearish inverted hammer. And I'm looking at it on weekly or even on monthly to see if. So what we have here on this chart is reading data from 2002 to now. So for 2002 to now, this is the highest point that the market has gotten to. The highest point the market has gotten to, right? So it's very possible that the retracement continues. It's very possible that we see a further sell in form of retracement in this market. You understand? And that is what we should be watching out for, especially when the weekly candle closes like this, gives this long rejection week and closes. It means that it's very possible that we get some significant bearish pressure in the market. So how do we take advantage of that? It's just like I analyzed on. All I need to look out for is on the daily, on the 4 hours or on 1 hour time frame. Where are those significant zones that I can actually sell and I can buy from? That's the question. Where are the significant zones I can sell and I can buy for? Now, if you notice this on 4 hours, or let me even look at it on 1 hour, I think we'll get a clear picture. Very good. If you notice on 1 hour, you see that market has been struggling with this part for a while. Market has been struggling in the past. So that is the place, that's where I'm looking out for. So it's either price breaks below this zone, and when we say break, it means that the candle has to close below this zone. So if price somehow body of the candle can form below this zone, what will happen? I will wait for price to retest, for price to push back into that zone, to retest it, and then from there I can actually look out for a sell to the downside, right? Another aspect of it will be for me to consider these high points also, right? If I consider this high point and somehow the market can break above this high point, okay? Remember that when we say market breaks above high point, market has to close, right? Then I can expect it to retest that point, and then from there, that is where I will now be looking out to take my buy. Okay, so these are the two zones that we expect that price can actually take advantage of. On the weekly time frame, it's showing us that it's very possible that we get some proper sell, some proper rejection in the market. Okay, but you can now come to 1 hour and decide where to take advantage of that move. And that is by coming to 1 hour and seeing where the most recent rejection zones are and using them to our favor or using them to our advantage. You understand? Now, when it comes to fundamentals that affect corn and coffee and all that, it's not so much about forest factory, when is there high impact or whatever, because these are agro commodities. They are most and foremost affected, of course, by demand and supply, but also by weather. Right? So one of the best ways to trade these instruments is to actually trade them technically. Okay. And one of the worst ways to trade them is to trade them using pending orders, because of the spread, because of how high the profit or loss per pip is. Please, if you're trading this instrument, I would advise that you're trading this instrument with a capital of nothing less than 2 million and above, because of how strong it is. It's 0.01, it's 0.05, for instance. 0.05 takes nothing for it to give you up to 1 million naira, maybe within 10-20 pips. Because when we analyzed it, we said one standard lot is giving one standard lot on corn, for example. One standard lot on corn. Remember that if I'm trading one standard lot on Euro USD, that's giving me $10 per pip. $10 per pip. The naira value of that would be around 17,000 naira, 16,000, 17,000 naira per pip on one standard lot. But on corn, one standard lot is giving you up to 700,000 naira or even more on corn, one standard lot. That means that 0.1 is around 70,000, 0.01 is 35,000. So that means if you even capture 30 pips with 0.05, you made up to 1 million naira on corn, right? That is why we advise, if you're trading these instruments, you need to have a very good capital size. A very good capital size, right? Personally, from time to time, during the last class, some persons reached out to me and they were interested in trading agro commodities, and they funded their accounts, and they have that we have a small group, I would say, where these analyses are given to them on a more regular basis. So if you're somebody who you want to go into agro-commodity trading. One thing I like to say about agro-commodity is that we put the same effort into analyzing the market, no matter the instrument. We put the same effort into look at candlestick pattern and analyzing the market. But agro-commodities are the instruments that give you more reward considering the effort you put in. And the only issue is that the capital size. So if you have the capital size, you have the ability to show that capital size, you can reach out to me. Those assistants will be given. Of course, at the end of the class, I'll drop my personal line, right? So that's it for coffee and for corn, which are the two instruments we are looking at today. Both of them on the weekly time frame signify a warning, that the current bullish run, if we're not, we need to be careful with the current bullish run. And that what we have done for corn and for coffee on 1 hour is to mark out those the two strong zones, the bullish zone, the supply zone, and the demand zone for both of them. What we did was to mark them out. I will now said, oh, for these two zones, I will now watch and see what price does. Whether price breaks above or price breaks below. Okay, and it's an instrument that sometimes may need to be patient, to be able to get the best. You understand? So by 3:35 now, corn will open again. I think it's open now. It's trading right now. By 3:35, you'll see very good movement in corn that you can take advantage of. The same thing for coffee, right? So um let me, like I said, we are having this tomorrow. For example, we are still going to have a special class on another group of assets. Let me be sure. With this same link by 2 p.m. we're going to have a class on indices. Tomorrow by 2 p.m. we're going to have a class on indices. On Wednesday, we're going to have a class on currencies. 2 p.m. with this same link. On Thursday, we'll repeat agro-commodity, and then on Friday, we'll repeat currencies. You understand? So make sure that by 2 p.m. you are here, right? This is a place to be, 2 p.m. So for anybody who is interested in going to agro-commodity and is able to work with that capital size, at least can conveniently, even if anything, this is one instrument that at least you can, with 0.02, 0.02, you can conveniently be making your 50,000 naira daily. You understand? All you need to do is just to be patient, catch it on the smaller time frame, take advantage, and you can make good money, right? So the only constraint is capital size. So if you have that capital size, you want to work this my personal line, you can reach out to me on WhatsApp. Okay, reach out to me on WhatsApp and we can move on from there. But yes, just like we say, when it comes to trading, there are opportunities for everyone, right? There's currency opportunity, there's commodity opportunity, there's indices opportunity for everyone, right? And it's so amazing that even in this month of December, when it always looks like the market is not volatile, market is still volatile, still moving, and it will continue to do so. Personally, I believe that this is singularly because of Daddy Trump. Because of Trump, dollar is gaining strength. Around the same time, indices are gaining strength, and the market is looking very healthy. So make sure that you are taking advantage of the market. Don't be like those people who say, "Oh, December market doesn't move." No, that used to be true, but that's not the case right now. Okay, that used to be true, but that's not the case right now. We are seeing increased volatility in the market, even as we approach the end of the year. Okay, so this is time to make money, maybe not time to spend as much. Okay, but I have some persons who even decide to fund their account in December so that they don't spend it. You understand, right? So it's all about being wise. December 31st is a day, January 1st is another day, right? So don't be carried away with um pressure to spend instead of investing, right? That's that. Over the course of, some persons have dropped questions which I've tried to answer during this conversation. But if you have any question, please drop it in the chat. We've been able to analyze these two instruments. Drop it in the chat. Let me attend to your question. But on Thursday, we are also going to pick up two different agro commodity to analyze. That's how we do it. But tomorrow by 2 p.m. with this same link, we're having a session on indices. That's where we look at US 100, D40, US 2000, US 30 indices, right? So I will wait for a minute or two for any question, and then after that, we'll call it a day. So you can chat me up. I have my number in the chat, which you can take and reach out to me on WhatsApp, please. On WhatsApp. Okay. So on WhatsApp. Okay. Okay. So yes, I think we can actually end it here. Thank you so much for your time. Do not forget that tomorrow by 8 a.m. we'll be here with this link to analyze the market generally. And then by 2 p.m. we'll be looking at the index market indices. Okay. So see you there. God bless you. Bye for now.